Hello, it's Cryptolyze. I hope you are well this November 29, 2023. We meet today to talk crypto, to talk news, to talk investment, to talk BTC, of course, and it starts right away. As a reminder, you always have the possibility of having free access to the educational course, which is a 60-hour training worth 400 euros, which allows you to learn blockchain, crypto, investment, analysis technical, trading, everything for NGT. Become profitable. Through 130 videos, 400 pages of guides, quizzes, to find out where you are in your progress, and all for free. To have access to this lifelong training, simply use the platform of one of our partners. Everything is explained in the comments and descriptions. Why investment? Because we have an investment giant who died, Charles Munger. If you don't necessarily know, he was Warren Buffett's sidekick who died at the age of 99. It's really people who created the notion of long-term investment, who created the notion of the value of a stock, and it's a man who died and who leaves Warren Buffett alone, who was really his sidekick during all these years in which they wrote a lot. Lots of projects. And so obviously I think someone is going to be very alone, and it's going to be Warren Buffett. And I think the notion of post-Buffett is still very complicated. Has already been discussed many times, and I think that it will be further validated, particularly on Bankshare Attaway, which is Warren Buffett's fund management company. So we continue the news this time. Much more crypto on Coinbase, which tells some of its customers that overall there has been a request from the SEC to retrieve information on their account and the connection with Bybit. So overall, these are users who received a request saying that all transactions going to Bybit had to be analyzed, and that we know that Bybit, for example, made modifications on French users in which it did not no longer accepts any French users, and this is generally a sign that there is a form of compliance or in any case legal pressure which is very strong, and there it is not missing. I think that it is not going to be the more I think that we risk having a set of information on Bybit, and which is rather logical given the relationship that there was between Bybit, Binance, and FTX. The three were very close. The three owned tokens from each of the exchanges and were based at the same time on the same process. Are we going to have the same problems from each other? That's to be determined. Are we going to have strong announcements at the level of Bybit? That's also to be determined. In any case, it's one of the reasons for which I started to migrate personally to an exchange which is non-KYC, which is ZoomX. I gave you a demonstration and a tutorial video if you are interested. It looks like it in the description. In any case, of course, I think we're going to have some news. There is Kraken who is putting pressure on the SEC officially. And I think that Bybit will not be long in having other problems from the SEC in the near future. Next to us, we have the great Arthur Hayes who explains his vision, which for him defines that the flood of dollars of the next bull run will come mainly from China, being that China is in the process of setting itself up to be able to, in fact, recreate debt, and precisely to be able to recreate monetary flows. And that as a result, the fight between the dollar and the yuan will lead to a valuation, and in any case, a direction of these flows towards actors like, why not Bitcoin, actors of this style, which are not linked to countries and which are therefore without borders. Next to that, we have the SEC requesting public feedback on the Franklin Templeton Hashdex BTC ETF. So it's interesting to see what is being done, and in fact, analysts are saying that it is accelerating. So yes, but on the other hand, it is accelerating, yet we had precisely this ETF there, which was delayed by the SEC. So to know that the SEC had until December 1st to validate it. Okay, there and GT. Still had time. And yet, despite this, they decided to delay their decision on this ETF. And as a result, Franklin Templeton has also updated its ETF application with new information that has been given. So this proves that there is a real discussion and that there is a form of acceleration in the validation of ETFs. And I think that, given the delay and given, in any case, the information that we have, is that if it is delayed on January 1, 2024, that implies that, in fact, it won't happen Q1 2024, and I even think that we could delay a little further, not necessarily until January, but why not until February or March? Once again, we have time. It is not because an ETF is refused that it cannot reapply, if it accepts the modifications and the elements necessary to reformulate a new request. Take the very clear example of Grayscale, okay? The number of times they have requested to switch to an ETF is just incredible. On the other hand, We still have things being put in place, communications being put in place. In particular, we have an article from Cointelegraph and GT, which explains the notion of buy the rumors, sell the news on precisely the notion of BTC. And that, what is it? This is the concept of traditional finance. Indeed, analysts explain that since these are ETFs that are driven by traditional finances, it is much more likely that there is a sell-off linked to the validation of these ETFs. Because this is the classic way everything in traditional finance works, and it generally happens in the validation of all ETFs. Well, there are other elements that come into account, notably the increase in CME flows, which we'll see later on the graphs. And he speaks precisely of the importance of BITO, who had a very strong sell-off, very important, which was the future ETF on BTC. I don't know if we remembered it. It was in 2021, and then we have here an increase now in BITO. We heard an increase in institutional exposure to BTC, and this happened at the time there was the rumor in GDT validation of ETFs. So this implies that there is a form of hedging. We will look at that, and in particular, we will look at the difference between the CME and the spot, which is for me very important for the general understanding of both. Besides, speaking of understanding, if you want to be ready for the bull run and have my investment strategy, it is a guide which is more than 30 pages, which is made available. The link is in the comments and in the description. It's free, so don't hesitate to grab it. And if we move forward in the classic, I also remind you that today we have the announcement of TT3 GDP, which falls to 1430. Certainly a lot of volatility on the classic markets, especially since we are clearly waiting for that. We are in a very important zone of resistance, of delay. We are at the end of the year. We are waiting for the end-of-year figures. And above all, we are on the end-of-year sell-off in which we are taking the profits, especially when we had an acceleration like that, and we are coming out of such a difficult year as we experienced in 2022. We are going to compensate in 2023, and that is exactly what we are seeing. Another thing is that the dollar is calming down with a reabsorption of the bearish acceleration that we had, particularly at the start of the day. And it's interesting to see that we are right on the level of an order block zone with a very important resistance zone, which also corresponds here to the Euro USD, the magic number 11, therefore, $1. The relationship between the euro and the dollar in which we have this figure, which is very important, which also corresponds to a big period of work, and which could precisely see the birth of a retracement here to retest the imbalance which is there, and the classic retest zone with the order block and the resistance zone. So there we should be able to have a retest also before having an upward acceleration to go and retest the 11s and be able to work again. Why am I telling you this? This is because we do not forget that the DXY, which is the dollar index, is based at more than 50 on the euro. And therefore, inevitably, the more we will see a movement of the euro in relation to the dollar, plus the dollar will be impacted, and therefore necessarily behind it we will have an attraction or not of American Treasury bonds. But that we will discuss in another daily because we're going to concentrate a little on the BTC, in which yesterday, we had an acceleration also. We will come back to this part there. And what is interesting to see is that, in fact, even if we have an acceleration, we also do not forget that we are in a range. And it is seen in this week that the candle is completely crushed because that we are quite simply in a range in which we are working on the 38,000, which is the top of this range. But what will interest me initially is to evaluate the difference between the CME and the BTC. So we have 38,500 on the CME and on the classic BTC. We are a little bit below 38,000 on a 37,955. You will tell me, but what is the difference? I remind you that the CME is therefore a future contract, therefore an off-spot exposure which is based on the Chicago Mercantile Exchange, which is the specialized stock exchange for institutional investors. So we can consider it as being the representation of institutional investments in BTC in particular. To return to the notion of the Sell-F article that there could be, what is interesting to see is that, yes, indeed, there I made the difference between BTC and CME, which allows us to see the difference between the two, and therefore the overexposure or underexposure between the two. And there, when we enter the negative, in fact, we are in an overexposure of the CME, and we see that, in fact, we have phases of overexposure and that we have been in an increase since October. The overexposure of CMEs. In any case, the increase in the long difference of CMEs compared to BTC. On its own, it doesn't mean anything. On the other hand, when we start to correlate it with the CME's open interest on BTC, so who are the levers injected into the CME? What do we see? Indeed, we see that we have an acceleration phase, which is equivalent here to this very strong acceleration phase. And for those who remember this zone, it was the zone in particular of BITO, the validation. the future ETF on BTC. What will be interesting will really be to concentrate on this area, and we will see that we have indeed an increase which has been gradual compared to that, and which shows that we have here a real increase in the open interest, and therefore long exposure to the CME. And so this also implies that at some point we will have to take profits, and this is precisely the aim of the article, is this increase in levers and representation and GT. I overexposure for profit taking on a validation of CME ETFs and therefore traditional finance? Or is it simply an accompaniment of the course in which CMEs, therefore institutional investors, are preparing to an influx of liquidity thanks to the opening and validation of spot ETFs? I remind you of two things before responding in the comment. Is that institutional investors have life and investment cycles that are much lower than ours. This implies that for them they must generate returns every year. This is the very principle of institutional investors of large funds. They must produce returns every year, and therefore they must necessarily produce profits at a given moment to be able to validate their annual return, and therefore validate their performance with their clients. And that is always very important. Implied they are always in the short to medium term, rarely in the long term, especially when we have had years as complicated as 2022. Nevertheless, tell me what you think in the comments. Is this a sell-off that is prepared? Is it simply the arrival of institutional investors that will trigger the bull run? Or why not, like Arthur Asa, think that it will be China which will trigger liquidity? So, another day, that's for next weekend. We are going to move forward on a vision which will be more total 3. So still these altcoins which are very important, because we certainly have an acceleration of BTC. But this which is going to be really important, it's also going to be what the impact is on altcoins. And we can clearly see that we're still holding on pretty well, despite the acceleration we've had. So recently we haven't had too much valuation on certain altcoins. So that clearly shows that this is a NG data movement which is pure BTC. And as long as we do not break, I think, the 38,000 of BTC and that we do not consolidate above, we will not have a new acceleration of altcoins, at least not a new breath, because we have already pushed well. So to show you a little bit of what happened, in fact, we had the very nice retest yesterday. We had defined it as a very nice entry for bullish continuity. We went to retest a large part from imbalance. There I told you that there in GT. Potentially we were on a bearish continuity to go a little lower. Clearly that was not validated. We did not break 36,700. And therefore, obviously, that means that the retest was been validated with this enormous acceleration in which we went here to recover all the liquidity of these zones. But we did not go and seek the liquidity of this top. And so this is very important. This is really an important signal for two things. It means that 1 and GT. Here we have the question of, are we still in this upward trend? Does the break here of this inducement of the liquidity gain of this zone not impact the upward continuity? First question. Second question, for me, given that we have not made a bearish continuity in relation to this break, it is very likely to have a ranging zone here, therefore of temporization, to have here a liquidity gain. And it is not normal to strengthen liquidity there. When we start to strengthen liquidity here, that implies that we will perhaps have a breather in the 37,200 and then have a new upward acceleration and liquidate this equal high which is in progress and which is put in place. We can see it clearly here, first, second, well, we could say third, and then taking liquidity, okay? For me, it would be a bit like this idea. First, second, we might still have a little work to do before we get an acceleration. Taking liquidity afterwards, will it be a taking of liquidity for a bullish acceleration to take us to 42.44? Or is it just going to be a liquidity grab to, on the other hand, go and retest the bottom of the range and retest the 35,000 zone here? We will see that and we will discuss it in due course in relation to the various information. Besides, speaking of information, we are going to look at the order flow, and there it will be very interesting because we always see that we confirm a trend which is bearish at the level of the two order flows, whether cumulative or whether it is only on Binance. And what is also interesting is that the bullish acceleration that we had here actually led to a very strong increase in open interest and a very strong breakout too. This means that there were a lot of very strong levers but very little volume overall, because when we look at the state of the positions of the top traders, we see that it does not change. And therefore that means that we are still holding its positions. And moreover, it can be seen here in which the market is aggressive. Yes, but no agree. We can clearly see that we have not broken the top of this zone. There we are even much lower. So the level of aggression only goes down. And that's why too. I think that we are not going to look for liquidity. We lack strong momentum. And we still have liquidity that is being established here over the long term. Yes, but not that when we look, we still have a lot of shorts which are repositioned here above 38,000 at the level of 38,500, in which we have a lot of liquidation. And it is precisely this very important level of liquidity that I spoke to you about. We are really here implied we defended this top there for a bearish continuity and got for shorts. So it is very likely to have a form of breathing, either a lateralization, and then have a wick, either to strengthen initially, and then a second wick to liquidate all this liquidity before doing the real movement, either the consolidation and starting again or the bearish breakout. I hope you like this video. If so, don't forget to leave me a like and a comment. It supports what I do every day, and that, above all, makes me very happy. And we meet at 13:30 to talk about Gala and also talk a little about the world of gaming and cryptocurrency. It's always very important, very interesting, and asking the question, is there always a narrative behind it? And that's 13:30.